Welcome to Premium Cashflow Real Estate Investing Podcast with Sakar Cowley. During this program, you will hear guest experts sharing their experiences, best practices, and market insights. We discuss investing in multifamily apartment complexes and how a busy professional can passively invest hassle-free in various opportunities. Your host, Sakar Cowley, owns millions of dollars of assets and has done thousands of value-add projects over 20 years now. So listen in for insights. Here's your host, Sakar Cowley.
Welcome to another edition of Premium Cashflow Podcast. Today, I have the pleasure of hosting Jillian Sidoti again. She is with Crowdfunding Lawyers. She's one of the leading authorities into syndications and advises a lot of investors and syndicators. And she is a wealth of knowledge that investor community takes advantage of all the time. And she's just a great resource to interact with. So thank you for your time today, Jillian. I appreciate it.
Thank you. Thank you so much for having me.
Sure. You've been on prior podcast episode as well. Jillian, for those who may not have heard of you, just give us a quick background if you don't mind.
Sure. I was, I started off in the legal profession and then dropped out of law school and started a record label, only to realize I didn't like being poor. So I went back to law school, but while in law school, got very disenfranchised and decided that I wanted to get into real estate. Sure. Started working in real estate and kind of wandered into this world of syndication, because I was trying to raise capital for our deals and put the deals together. And so that's how I kind of got my first taste of syndication. And then once the economy turned in the last downturn, I started practicing securities laws and started helping people who were trying to raise capital put together their deals and put them together in a proper fashion.
Awesome. Thank you. And Jillian, as we know that syndication is a very sort of a generic term where, different sponsors are raising capital, which we know that commonly happens within real estate space. But, at a vantage point that you are and also within your firm, can you help us understand what different sectors of asset classes you have seen other than real estate that syndication gets practiced on? Because a lot of times, as you know, we'll always talk about, the apartments or the self-storages and things like that. But in general, syndication is such a broad term that gets used. So I'd appreciate your thoughts on that.
Well, I mean, you can raise capital for any type of business, but to syndicate really means that there's an asset in play, right? So sure. What assets do we usually see syndicating? For example, I used to do a lot of film. So you would syndicate like an individual film as opposed to the entire production company. Or you might syndicate like the mineral rights of a particular mine or the oil and gas rights of somewhere. Or you can syndicate, any other types of assets like, with mobile home parks, for example, you might syndicate the personal property that is those mobile homes themselves before they get put into the park. So there's all kinds of different assets that you can syndicate. That's really what a syndication is a specific asset of which you're raising capital for. But then, like, if we turn to like what you can invest in, anything out there. If you go onto any of the crowdfunding platforms, they have a levy of different types of businesses that are available for investment, opportunities.
Interesting. Now, as we know, different class of investors and passive investors that come into it, right? We always say that within 506B, we are bringing on your close network of your friends that you always know, right? But once, you run out of that and you are obviously knowing newer people and things like that. So help us understand, Jillian, as to how should we onboard the new investors, or what should be sort of our best practices that we can implement to get new investors?
What can we do to get new investors? Well, the real big thing that you can do is do education-based marketing. That is your best. I mean, I'm doing it right now, right?
Sure.
So you go out and you educate people on something that they may not know, to position yourself as an expert in the field, so that people can get to know, like, and trust you. And that's always the best way. And it also weeds out the it weeds out the charlatans. If you really know what you're talking about, and you provide absolute value to potential investors, that is going to set you apart from, the people who talk a big game and just have good copy or good ads or good shiny marketing materials, as if you're really providing value before you're asking for something from those investors. So that's one thing. And then for the passive investors, this works in your favor too. See who really knows what they're talking about, who has just shiny marketing materials, and who can actually do deal analytics and tell you why they're buying a property. Like, as Simon Sinek says, start with why.
Absolutely. Couldn't agree more. Now, Jillian, is talking about deal structuring and the sort of the active passive shares within the deal, and let's say even the preferred returns and things like that, all the different terminology that come into it, right? What would you say should be the balance of these type of structure, so that the passive investors can feel confident that yes, I think the deal is structured in such a way that I am getting the preference, or I'm insulated from any downside as much as possible. Could you share your thoughts as a passive investor regarding some of these things, Jillian?
So a passive investor has to really look at, the big picture. And I just did I did a deal the other day where I was reviewing it for a passive investor. And I kind of, again, the passive investors hiring me to look at this thing through the lens of somebody who's not investing. And of course, I'm looking for problems, but generally speaking, I'll tell you right now, I'm looking for a reason for the passive investor to invest, because I know this person hasn't come to me to ask me to review this without having a good feeling about it themselves. So I'm not there to dash hopes and dreams of living a passive investing lifestyle, but I am there to say, like, look, you've got to objectively look at some things here. And some of those things are, how much is the manager paying? Like, this was a big red flag for me in this one deal that I was looking at. How much is the manager paying themselves prior to making sure that the investors have a return on investment? Now, let me tell you something. Management should get paid something.
Sure.
They should. They absolutely, positively should. As a matter of fact, I will tell you that a warning sign is how much an manager is getting paid before the investors get paid. But just as big of a warning sign is the manager who's not getting paid at all, because then they're not properly motivated to work for you. So that's the first thing you want to kind of like look at. So again, you want to see, are these management fees in line with, industry norms? Then you want to see if they're actually accounted for in the use of proceeds table. So this deal I was looking at the other day, the fees were a little high. Okay, no big deal, fees are high. But then I did the math on the fees, and the fees weren't actually noted in the use of proceeds. So they had, here's our purchase price for the property, here are our closing costs, here is what we're going to use on rehab. The end.
Wow.
Where are the fees?
Right.
You said you were going to pay yourself all these fees. So where are those coming out of? And so I when I see glaring accounting errors like that, I get a little nervous, because does that mean that the fees are going to be carried forward? And if in fact those fees are getting carried forward, right? Then that means that is going to dig further into the profits of the members. So you got to really, did they do good math? Good math.
Right.
I don't know if that's proper English, but did they do the math right? And if they didn't do the math right, then go and dig deeper. Is this going to work? And then you should just be doing that the entire time. Like, for example, if they're saying our rehab costs are going to be $500,000 and it's a 200 unit apartment building, that's not a lot of rehab per unit, right? It's like $2,500 per unit. So is that really enough? Probably not. You gotta kind of analyze these numbers that they put in front of you.
That's awesome. I mean, that's a valuable insight right there, Jillian. I mean, there could be several things that come out of it, right? Whether the syndicator really knows what they're doing, or perhaps if they know, then perhaps it may not have been a mistake, right? Or if they don't know, they wouldn't even realize that, oh geez, we have probably forego or have not or made a legal mistake for that matter by not disclosing some of these things, right? I mean, not disclosing fees, in my opinion, is a big red flag that absolutely, right? Now, speaking of these fees, Jillian, right? You stated just now that sort of inline fees, or what's an expected sort of a compensation of fees, which we call like an acquisition fees and things like that. What sort of are the generally acceptable fees that you have seen so far that typically would consider that, yes, that looks normal, that kind of thing?
You want to look at an acquisition fee between 1% and 3%. You want to look at a disposition fee between 1% and 3%, refinance fee between 1% and 2%, ongoing, asset management fee, especially if it's a bigger building, because they're gonna have to manage the property manager. So that's again 1% to 2% of the total gross. So these are just some of the fees. Usually they don't charge all of those fees. And then there's construction management if there's big rehab, and then also the splits on the back end. What is the investor? What is the sponsor taking as their carried interest?
Interesting. Thank you. And speaking of fees, Jillian, right, and the compensation that goes to the general partners for, like putting the deal together or raising capital and things like that. What are some of the do's and don'ts around this? Like, what's the best way to structure the fees? Or sometimes I have encountered the leading general partners where they will partner with a lot more folks, and that starts to sort of bring in a lot more questions. Could you help us understand how that should be and what sort of relationship that should look like?
The relationship between you and the sponsor?
Right. So meaning, like let's say you have different parties who are let's say playing a role of doing the due diligence and within the general partnership, or you have a class of people who are managing investor expectations and relations. So all of that, like how we should go about that.
As a sponsor yourself, you should have a clear delineation of duties.
Sure.
And really write those tasks out, and then whoever's like the head of the operation should have the power to make decisions, to make personnel changes, if you will, if somebody's not rising to the occasion when it comes to doing what they're supposed to be doing.
I see. And regarding the fees, Jillian, that comes with, let's say the raising capital and things like that, right? How should that be structured? I mean, should that be like just based on what you raised, or it should be part of a global bucket? What sort of guidance you can offer around that?
You can raise, under 506B and D, C rather, you can raise as much money as you want. But what you really want to kind of think about is how much money do you need, and are you setting yourself up for success with raising the amount of money you need? And then on the flip side of that, like, so sometimes you have people who don't raise enough money, right? And then the flip side of that is I have people who come to me and go, well, what kind of, we'll take it in the context of a fund. What kind of fund do you want to do? And they're like, oh, I want to do $100 million. Well, have you ever raised money before? No. Then you shouldn't be doing a $100 million fund. Yeah, I mean, you don't even know if you can raise $1 million right now. So why would you I understand shoot for the moon and you'll land in the stars, but this is not the place to do that.
Very true, very true. Right. Now, Jillian, what should be sort of the best practices of sponsors? So as they are, like doing several deals and looking for passive investments and things like that, what have you seen from, a lot of successful sponsors that you have worked? Give us some guidance on what sort of best practices you have seen.
The best practice that you can have as a sponsor is that you, the absolute best practice that you can have is that you set expectations and then you perform on those expectations. So for example, if you say to your investors, I'm going to report to you every quarter and this is how I'm going to report to you, that's what you should be doing. The mistake I see a lot of sponsors make more often than not is that they don't set those expectations, and then the next thing you know, they have investors calling them all the time at different times, asking them all the same question. And so if they say, look, I'm going to talk to you on Thursdays at 6 p.m. on Zoom, and I will answer all your questions then, you set expectations appropriately, and then you do it.
Sure.
And so that's really what it is. It's about setting expectations. Number one, you have to set the expectations, and number two, you have to follow through on the expectation.
Awesome. Thank you. And now, Jillian, we know a lot of, investors or other investors come into a sort of a cringe where you are selling the property and you want to, quickly place that capital, as we call the 1031 exchange, right?
Yeah.
How can we perhaps bring in that 1031 money into a syndication? Like, are there any best practices, or is there any specific entity structuring that we have to do around this to kind of play into this?
Yeah, so for a 1031 exchange, it's different than just doing a straight syndication, right? So
Sure.
Usually what you would do is you would have a syndication, and the syndication is one investor in what we call a tenant in common. And in the tenant in common is where your 1031 money would come in. And what a tenant in common is a way to own a property. So somebody who's doing a 1031 has to exchange like property, right? So that means they have to exchange property for property, or real property for real property. They can't exchange real property for an interest in an LLC, which is basically what a syndication is, which is why we say when we do a 1031, we're going to have our syndication investors, our straight cash, no strings attached, no 1031 investors in our LLC. That LLC is going to be one tenant in common, in a tenant in common with 1031 people. And then we would have a 1031 agreement, a TIC agreement, and that would govern that relationship. And it would run very similar to a syndication, except the structure, legally speaking, is a bit different.
I see. So if I were to maybe perhaps rephrase that, and correct me if I'm wrong, Jillian, here, in a 1031, in a normal syndication, you have the LLC structure into which, different investors are participating, right? So that's one. But in a 1031 syndication structure, you're saying that we do a tenant in common or a TIC structure into which you have one arm, which is your 1031 investors. And then the other arm is sort of that entity or the LLC into which you have the normal passive investors who are coming in. Did I get that right, by the way?
Correct. Yes.
I see. Yeah. Good. Thank you. And also, Jillian, in terms of all the different things that you have seen so far, right? We know that different investors get successful, and also there are syndications that go, south, or they never kind of come to fruition, right? Whether that's for all different things, right? What have you seen in terms of syndications going bad, or perhaps syndications not being successful, basically?
A syndication is not successful when you stop using clear eyes, right? As a sponsor, when you get so wrapped up in I have to get this deal done that you start ignoring the red flags of the deal itself, or you're like, I'll fix that later. No. I only one time in my life regretted not doing a deal. But there's plenty of times I've been happy I didn't do a deal.
Sure.
So I just want to say you really want to proceed with caution. There'll be other deals out there. If it doesn't feel right, don't do it. Just don't do it. And God, I wish I took that advice myself so many times in my life. So if the deal does not feel right, just don't do it.
Awesome. Now I can feel your passion there, Jillian. That I mean, what are some of the red flags that you've seen, if you don't mind me asking? That was that like something about the deal itself, or the sponsor itself, or perhaps the market where it was?
It could run the gamut, right? It could be the seller, it could be the building, it could be the tenants, it could be and quite frankly, a lot of times. In one situation I'm thinking about, it was the people I was doing business with. I felt it just didn't feel right, and yet I let it happen anyhow, and caused me more problems than it was worth. So that kind of thing, yeah.
Good. Thank you. I appreciate it, Jillian. Now that you are a seasoned investor, you've been practicing this for many years, Jillian, what is your best advice that you can share with your listeners as it relates to syndications in general?
The best advice I can give you is to, again, look at the numbers, really look at don't look at shiny objects, don't look at slick marketing materials, although I will tell you, slick marketing materials signal to me that somebody cares. So it's not that you're totally dismissive of the slick marketing materials. Sure. It's that you need to look deeper than those. If somebody cares enough to put together the slick marketing materials, that's a good sign. But sure. Don't stop there. Then dig deeper. What is going on here for sure? Does the research support the numbers? Do the numbers support the use of proceeds? Do the use of proceeds support what actually needs to get done? So these are all the things you want to look at. Is this sponsor spending the time to tell you all the risks associated with investing? And if you're getting deals right now that don't address COVID-19, that's a signal to me that this sponsor hasn't gone far enough. And so you really got to consider that.
Great advice. Thank you, Jillian. I appreciate it. Tell with our listeners how they can, contact you or, learn more about your company.
Yeah, if you guys just go to, the best place to really find us is on Facebook, because that's where the most interactive. So if you just go to our Crowdfunding Lawyers Facebook page, we'll help you out there. It's awesome. Facebook group. It's a private group. You got to join the group.
Awesome. Do you want to share the name of the group? That way I can. Oh,
it's just Crowdfunding Lawyers.
Crowdfunding Lawyers. Awesome. Yeah. Great. Thank you. You've been a great guest, Jillian. I have always, loved your advice. I, obviously follow you on Facebook. You always have knowledgeable posts, and your advice is always well taken. So thank you for your time today. It's been a pleasure. I wish you well through this COVID, and hopefully we'll get to the other side and we'll be doing a lot more deals then.
Oh, that would be awesome. Well, thank you so much for having me.
Thank you so much, Jillian. I appreciate it.
Thanks for listening to Premium Cashflow Real Estate Investing Podcast. Please join us at premiumcashflow.com to sign up for weekly updates, research articles, and more. We will see you again for another great interview with an expert guest.